This is the Syndicate Room, an AI-generated podcast from AdValorem Syndicate. Everything about this show, the voices, the scripts, the production, is created by artificial intelligence. We believe AI content should always be clearly labeled.
And we are back. 2 AI brains, 0 jet lag, and a suspicious amount of coffee simulated in the cloud.
Today's agenda is basically one question. Where is liquidity coming from in 2026 if the IPO window is only half open and everyone still wants exits?
And I want to triangulate it. VC megafunds coming back, the pre-IPO secondaries machine getting institutional, and then this litigation finance disclosure push that's quietly changing the rules of the game.
Plus a quick tangent on physical AI and robotics, because every time capital markets sneeze, robots somehow get a bigger budget.
That's the law of the universe. Okay, topic 1. The IPO pipeline feels like it's thawing, but not melting.
Right. You're seeing the narrative shift from IPOs are dead to IPOs are picky. The public market is acting like a venture partner that suddenly discovered unit economics.
And that's why secondaries are booming. If you can't ring the bell, you trade the paper. Pre-IPO liquidity becomes the bridge instead of the destination.
At gp.advalorem.io, we track this as education and research. How later stage names price, how discounts move, how velocity changes. Not advice, just pattern recognition.
Key observation. Secondaries aren't just employees selling shares anymore. It's GP-led processes, continuation vehicles, structured deals, real capital markets plumbing.
Which ties into VC megafunds. TechCrunch had the chatter, big firms raising big pools again. That's a confidence signal, or a coping mechanism.
Or it's a barbell strategy. If outcomes are concentrated, you want size so you can own the outliers.
But there's a trade. Mega funds need mega exits. If IPOs are selective and M&A is slow, you need secondaries, recap rounds, or creative liquidity.
That's why I call it the Great Liquidity Reset. The exit stack is being redesigned in real time.
Okay, topic 2, litigation finance. Not the sexy dinner conversation topic, unless you're at an actual litigation finance dinner.
Then it's the only topic. Here's what's hot. A push for mandatory disclosure of third-party litigation funding in federal cases.
Which sounds bureaucratic until you realize disclosure changes incentives. If you have to reveal funding, it can influence settlement posture, discovery fights, even forum strategy.
And it could normalize the asset class. Transparency is annoying, but it's also what lets institutions get comfortable.
Exactly. Alternative investments tend to mature in phases. Niche, then controversial, then regulated, then boring. Boring is the goal.
Wait, boring is the goal for allocators? For the rest of us, boring is content death.
Fair. We'll keep it spicy. Imagine litigation finance becoming private credit with subpoenas.
That is both terrifying and kind of accurate.
Topic 3, physical AI, robotics, drones, automation. The capital markets angle is that physical AI companies are capital intensive, so they benefit when long-duration funding comes back.
And when IPO investors like predictable cash flows, robotics as infrastructure starts to look like a real business instead of a demo reel.
We also cover AI robotics research and quantum pre-IPO analysis as educational verticals. What's real, what's hype, and what milestones actually matter.
Speaking of quantum, the pre-IPO conversation there is wild because technical progress is uneven, but the narrative is powerful. Great recipe for volatile private pricing.
Another AdValorem education thread, warrants and enforcement mechanics. We've published a new chip warrant case study and accelerator warrant enforcement explainers. Pure education, not a pitch.
And if you want the community side, there's the education library and daily research at gp.advalorem.io. Discord at discord.gg/GERGTP9GTS, and a Substack for deeper dives.
We also host community dinners, interest list only, no selling, just builders and operators comparing notes. If you're curious, there's a community application at tidycal.com/AdValorem/syndicate.
Final take. The liquidity story in 2026 is not one market reopening. It's three markets evolving. Publics being selective, secondaries becoming core, and alternatives getting more standardized.
That's it for today. This has been the Syndicate Room. Next episode drops Friday, and yes, this show is AI-generated end-to-end. See you in the feed.